Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at the signs and signals which are telling us that Bitcoin is on the brink of a massive move and why we need to pay attention. And I'll also be giving you one major signal which will be the most likely green light to trigger the Bitcoin move to the upside. I'll go through exactly what's happening in the background with the news, with the ETFs, as well as look at the wider markets to show exactly what's influencing Bitcoin. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, I'm going to start off with some of the signals I've been showing you over the last few videos and to give you an update exactly where we are with those signals. But also after those signals, I'm going to give you one major signal which is about to take place, which should be the green light for the trigger for the Bitcoin price to move much, much higher. For the benefit of those people who are new and don't know these signals, I'm going to start off in the first cycle here, just to give you the background, and it's also a very good revision for us to focus on exactly what those signals are. Okay, so we're back in the first cycle here, back in 2012. This is the halving, the red line, and this is the peak before that halving. And I've also put on the pi cycle here, so you can see the inputs of the pi cycle. The 111 simple moving average, that's the green line here, the fast moving average, and then you have the red line here, the 350 simple moving average, which is the slower moving average. And this is the style. So in the last video I did last Monday, I gave you two signals. There is an additional third signal here with the green line. And also, once I've given you the cycle by cycle, I'm going to give you one particular signal which will give you the green light when the market is going to take off. So in the last couple of videos, the signals I've given you is this here, i.e. the peak before the halving. Once we cross over that, that is usually the first sign that the Bitcoin price is getting ready for this parabolic move here, this one here. And the second signal is when it goes above the red line of the pi cycle. There is another signal before these two, and that is the green line of the pi cycle. So you'll notice that after the halving, the price actually comes back down to either retest the green line or falls below it, as in this case here. But once it recaptures it, that is the first signal that is going to start moving and retest the previous high before the halving. And then the red line comes into play there. But I want you to also notice the other thing here. But I want you to notice something incredibly important here. When it first comes up to the red line, and that's after the halving, there's a rejection there. And that is a good clue that when we come up to the red line in this current cycle, that more than likely we're going to get some sort of a correction. And the correction here to the bottom of that next candle was about 13%. So just remember those 4 points. Firstly, after the halving, the price engages with the green line, either finds support on here or in this case actually falls below. But once it recaptures it, that's the first signal. The second signal is to retest the peak before the halving. And the third signal is the red line breaking above there before the parabolic move. And the correction at the red line. Second cycle, 2016. As you can see, after the halving, the price falls down once again below the green line. But once we recaptured it here, after engaging with it for a while, then the second signal is this one here, retesting the peak before the halving. Once we break above that, we come to the red line. As you can see, one more correction there. This time the correction was much more deeper, all the way back to the green line of about 35%. But once we break above that, that's the parabolic move to the upside. And back in 2020, when we had the third cycle, halving here, previous peak here, after the halving, the price falls back down. And this time it went up above the peak before the halving, i.e. at this point here, but actually comes back to retest the green line. Very important for it to retest this green line. And this is why I wanted to include this into the analysis today, that the Bitcoin price in each of the 4 cycles so far has actually engaged with the green line after the halving. So once it came and found support here and actually fell down below the green line here, once it recaptured it straight away, That was a good signal, but once again it went back above the peak before the halving here, and then we came up to the red line, and as you can see one more time there was a correction here. And the reason why I'm mentioning this correction is because there are a lot of traders who watch my videos. So if you're looking for a trade, and I'm not encouraging you to do so, as you know I'm a fully allocated investor, so at the red line this time around we got a 16% correction. So the first cycle was 13%, the second cycle 35%, the third cycle here 16%. So that means that in all the previous 3 cycles we got a rejection right at the red line before we broke above it, and that was your final signal for the parabolic move to the upside. Which brings us to the current cycle, exactly the same pattern. Always remember, with Bitcoin there is a very high probability that it plays out the same or the similar types of patterns in each cycle. So once again, the halving 19th of April, the previous peak here at 73,800. After the halving, the price fell back once again to the green line, and as before in the second cycle, fell below it here. But once it recaptures it and starts to engage with the green line, this is the prelude, i.e. the prerequisite before it comes up to retest the peak before the halving here at 73,800. So this is on its way now to retest this line here at 73,800. And as we know with Bitcoin, it has a habit of trying to shake people out. So I wouldn't be surprised if it came back down to the green line or even just went below it to recapture that one more time. So be aware of that. That's a real possibility. But as per the previous cycle, once it starts re-engaging with the green line, and it's now gone above that now, means that there's a much higher probability that it's going to come and retest the 73,800. And then the red line is over here. So if you look at the trajectory here, if you carry that on, once we get above the 73,800 and come to retest this, there is a high probability we're going to get rejected. And there's an opportunity for a trade at that point. So there you have it. This is where we're at now. The fact that we've recaptured the green line is one of the prerequisites, the prelude to the testing of the 73,800, and that is also the prelude to the testing of the red line. So if there was just one signal you needed to be aware of, what would that be? Let me zoom out and show you something very interesting. By the way, we're on the weekly chart here. Okay, if we go back to the first cycle here, what I've got here is the simple moving averages. The yellow is the 21, the white is the 50, and the red is the 100 simple moving average. The 200, the green line up here, only started at that point. So in the first cycle, what we had was the 3 simple moving averages in chronological order, i.e. the 20, 50 and the 100. They were all in line with each other before the parabolic move to the top of the bull market. Once again, so in the second halving here, after the halving, they were fully lined up one more time after this cross here just before the halving. So they were fully lined up, the 20, the 50, the 100 and the 200 before the parabolic move to the end of the bull market. And in the third cycle here after the halving, one more time, you can see that the yellow line, the 20, waited to go above the 50. Once they'd lined up properly, the 20, 50, 100 and 200 there, and that was at this point here. That's when it went for the parabolic move to the end of the bull market. And currently, this is where we're at now. The 20 and the 50 are all lined up exactly as they should be. But you can see here the 100 and the 200 haven't crossed over yet. So once they cross over, this will allow the price to move above the previous peak before the halving, and as the price moves above that peak, above the 73,800, that will allow the 100 to get above the 200, and that will be the final signal that we're on our way to the parabolic move for the end of the bull market. So there you have it, a number of signals, a trading opportunity, and the main thing to look out for. Okay, we're going to have a look at the wider news, what's going on, which may well affect the Bitcoin price, and it has done, and the news that President Biden had pulled out, and because Donald Trump is very pro-crypto, people think that the bull run is now well and truly on its way. And of course that may well be the case. We don't know, nobody knows the future, but certainly many people think this is a huge boost for the crypto assets going forward. But there is one word of warning and a caution with a potential bearish pressure on the Bitcoin price, and that is that in the UK, just like with Germany selling off its bitcoins over the last few weeks, we do have the UK police, which seized about 61,000 bitcoins from a Chinese investment fraud. And with the new government in place in the UK, they will be looking to raise money in order to pay for some of the projects that they've got. And that is to sell the bitcoins without realizing that we're on the verge of a parabolic move. But as we know with the German selling, it was very much bought up by the ETF. So it may well be the case, but it's something to be aware of. And if we move on to the liquidation heat map, this is telling us where the liquidation leverage players are. So to the bottom side is this green line here, and if you see in that black box there, it says $19.92 million worth of leverage, and that's a price of 65,300. So we still have that potential. If the Bitcoin price wants to take them out, it will have to go back down to the 65.2. And to the top side of that, this yellow zone here, that's at 68.7. And we came up to that level here around about 68.3. So the chances that we're going to get back up to 68.7, and that's the range so far going forward this week. And if you've been wondering why the Bitcoin price has been rallying over the last week or so, and this is one of the major reasons why, what we've got is the ETF Bitcoin flows. This is for July the 19th. And as you can see, there's 5,697 Bitcoins net inflows on that date. But not just on July the 19th. If we scroll down here and look at the daily and total to date, you can see over the last week or so, we've had a very big inflow after the market had actually come back down to the 53,000 during these outflows that were going on at that time a couple of weeks ago. And this is reflected when we look at the asset inflows and outflows in the ETFs. And that is that over the last 7 days, this gives you an incredibly good picture of what's going on with the ETFs. And we need to always be aware. And whenever we see these big inflows, this is usually when we've just had a rally. So we've gone from 53,000 to 68,000 over the last week. And ETFs have provided a very good explanation for that. So here, over the last 7 days, you can see that BlackRock, which is now the #1 ETF, had inflows of well over 11,000, whereas the grayscale, it looks to me as though their selling is now slowly subsiding. And over the last week, they went down by only 867 compared to the inflows by BlackRock of 11,000. But if you cast your eye down here, you'll see virtually all of them are in the green figures. And you're starting to get some very nice big numbers here from the likes of ARK at 1,200 and Van Eck Bitcoin ETF at 970, as well as Invesco Galaxy at 862. So you're seeing quite nice numbers now flowing into the ETFs. And that all fits in with that premise that we're going to go and retest that 73,800. So all the major signs are aligning with each other for that big parabolic move very shortly. And that reminds me that one of the private members last week asked me when we can expect for the price of Bitcoin to go above the 73,800, which is the high that we've reached so far, and it's also the peak before the halving that we've just had. So if you're looking for a timeline, and as per the title of this video as well, why we're on the brink of this massive move very shortly towards the top of the bull market, i.e. the parabolic move, and that is that when we can expect the start of the parabolic move. So starting from the first halving, it took us 3 months before we broke up above the previous peak before the halving here. So that was 3 months here. Second peak, it took us 1, 2, 3, 4, 5th month before we broke the previous peak. And in the third halving, 2020, it just took 2 months. The second month after the halving, we broke up. So what we're really looking at is between 2 months and 5 months. And currently, if we move here, you can see quite clearly after the halving, in July at the moment, we're on the 3rd month. So if the previous cycles are to go by, we should be clearing the 73,800 by the end of September. So currently on the 3rd month, we are well within the bounds that it can happen today, it can happen next week, it can happen next month, all the way up to the end of September. So this is why this is all now developing to be quite imminent in terms of the break to the upside. And if we move on to the wider markets, they seem to be creating the right conditions for Bitcoin to take off over the next couple of months. So we've got the dollar here on the charts. It's broken below this symmetrical triangle, which we've been talking about over the last many videos. This is what we were expecting, a fall below this support line over here. And this is exactly what it's done. And obviously in classical charting, whenever we break the support line, there is a very high probability to come and retest that support as resistance before we get a rejection. So it may well be that the dollar comes back up to retest it back up to the 105 before we get rejected, and this is where we're expecting it to go back down to around about the 100 level, and that should set up over the next few months for a big move for the wider markets like Bitcoin have a big rally. And if we move on to the SPX, we can see quite clearly that the end of the 60-day cycle, as we mentioned last week, that we may well get a correction at this point here as we're coming deep into the 60-day cycle. It's exactly what we got towards the end of the week, and it all depends where we're going to find support. It looks to me that the bottom of this consolidation here is a good place for it to find support, but also at the tops of those candles here as well. So that's exactly where it found rest at the end of the week. So we could actually get a bounce either from where we are, and that could well be the start of the new cycle. However, we haven't had a bounce. This candle tells us that there isn't a long wick at the bottom here. So you usually find the start of a new cycle has a long wick at the bottom where there's a rejection of lower prices before we start moving to the higher side for the new cycle. So I would suspect with a higher probability that we're going to come back down to these levels here, have one quick fall and leaving a wick at the bottom of that, and that'll be the start of the new cycle here. And of course, any of the other economic factors, if they're positive this week, that turnaround can come anytime in the next few days. And if we move on to gold, what we found last week on the weekly time frame was this very ugly looking candle here. So what we got was a rejection of higher prices at this point. So we broke up above this neckline, which was at the top of this shooting star candle here, which was the cause of the consolidation in the first place, and now we've got a rejection here. So it looks with a higher probability that we're going to retest this level down here at around about the 2,300 before we make another attempt to break up above here. And on silver, the current monthly candle is showing a gravestone doji candle. Obviously this can change over the next 9 days or so. On the weekly chart, we seem to be getting pressure to the downside here. So we could well come back to this 61.8 level, as I've had this on now for quite a few months. We could finally test this, leave a long wick at the bottom here before moving to the upside. So still looking very bullish as we're going up here, creating a flag, getting up here, creating this consolidation as a flag before the continuation to the upside. And moving on to the 60-day cycle for Bitcoin. And what we've really got here is we've got confirmation of this day 65 cycle low with this long wick at the bottom, as mentioned last week. So I've taken the question mark away from the D65. So that's now been confirmed as we came up above this particular line. So this was our final confirmation at the top of this gravestone doji candle here. And as you can see, once we got above it, we came back, retested it, and now we're on our way again into the midpoint. This is the white line here. Midpoint of the 60-day cycle ends at this red line here around the end of August, 29th of August. So what we should see is either a further move to the upside into the 30-day cycle midpoint before you get a midpoint correction, wherever that's going to be, either at the top here or at the bottom of these candles here. So we should see some sort of a correction back to around about the 65 mark, and if it wants to go a little bit lower to 62, so between 62 and 65, you'd expect a correction here before moving into the final phase at the end of the 60-day cycle. And as I mentioned last week, it's unlikely it's going to get above the 73,800 after such a heavy fall down to 63,000. So in the first cycle, after such a deep correction, it's unlikely to go above the previous peak here. And it's really the next cycle after the August. So we're talking about September, where we could expect, depending on how far we get up to here, if we can come and retest 73,800 towards the end of this cycle, then it would have a very high probability to break the 73,800. And we'll see that all the signals that I've shown you at the beginning of this video will have been hit. And it's now time for this. Yes, you've guessed it, it's the Brexit indicators, so that we can take the overall bigger picture view of Bitcoin and how it's fitting in with the 4-year cycle. We can have a look at these Brexit indicators. The first one is obviously going to be the one that's the most reliable in terms of its history. So all the 5 major peaks in the past have been where the green line of the pi cycle has crossed above the red line. So this is now, as you can see here, the pi cycle green line has been actually going down in its trajectory. But as the price is now moving up, this should be now turning back up again. And depending on how fast the price of Bitcoin moves in the next few months will determine how quickly the green line comes and hits the red line over the coming 6 to 12 months, if not a little bit longer. But the main takeaway here, we can see that the red and the green lines are very far apart. And the longer it takes, the longer it's going to take for these to cross over, and hence we'll get a bigger price at the end of the bull market. So it's quite clear that the pi cycles haven't crossed over yet, and the Bitcoin top cap, where the blue line, as you can see, has predicted the tops of the previous peaks on 4 out of the 5 occasions. We didn't quite meet it there, but currently we're over here. So we can see that 4 out of the last 5, i.e. 80%, is predicted the top of the bull market. And now we're on the 6th peak, but we're so far away, it looks very obvious that we are nowhere near the peak of this market. And if we have a look at the stock to flow model, these dotted lines you can see here are the halvings. And after each halving, you can see that the price starts to move above this, the stock to flow average price. So this is where the peaks are going to occur after the halving here. So again, this one went above that brown line here, and after this halving went above the brown line twice with that double top, and currently we're just below that line here. So obviously it's going to start moving back up again. Depends on how far it's going to go, but this brown line currently is at about $450,000. Whether this is going to reach that level or not this time around, because you can see quite clearly that the peaks here were much higher than the last 2 peaks that we got here. So it may well not go above. So taking a bigger picture view, we should always look at the possibility that it may not go above that brown line this time around. And as I said many times before, don't get hung up about the end price here. Always look at the Brexit indicators, and they're showing us quite clearly that we're not at the time of exiting at the moment from this market. And if we had a look at the Puel multiple, once again, yes, the peaks are getting lower, so we've got lower highs on these peaks, but look where the price is currently, way down here. So even if it comes to this trend line, it's going to be around about the time where it's going to be within this red zone here. So we're well off at that point so far. So obviously there's lots of room for Bitcoin to move into with higher prices. Okay, quite a few people have been asking me about the ratio trades that we do in the private members section here, where we focus on the Bitcoin miners. But just to give you a little bit of an insight, the ratio trades are really doing trading on pairs. With foreign exchange, you're doing trading with pairs of currencies like the British pound against the US dollar. With ratio trading, you're doing something very similar between 2 Bitcoin miners. So in this case here, with this example, this is between Marathon and CleanSpark. And as you can see with these charts, they give you a very good opportunity to trade within a certain pattern. So what we've got here is a bear flag where prices are moving within this pattern here, at the top, to the bottom, to the top, to the bottom, to the top, etc. So what this is really saying is that Marathon Digital Holdings, relative to the price of CleanSpark, is moving down against CleanSpark. Then it's moving up, i.e. it's rising faster than CleanSpark. They both may be rising, but one's rising faster than the other. In this case, up to this point, Marathon is rising above the CleanSpark price relatively. Then Marathon is going down against CleanSpark, up again, down again, up again, down again, up again, etc. And what that does is it allows us to do ratio trading. So once these 2 points get established, you can move out of Marathon here and get into CleanSpark, and at this point get back into Marathon from CleanSpark, and vice versa. So you're just moving in between 2 assets, playing these patterns here. And of course, just like now, it's actually breaking up above that neckline. So obviously this is the point where you have a decision to make. But as you can see with this point, it's right at the resistance point based on the support here at this point. So it may well be we're going to get a turnaround here. So at this point, it would be better to be in CleanSpark to ride down to these levels here. And just based on that simple method, these are the results that we've had so far from the beginning of 2024. Altogether, we've had 12 completed trades. And you can see on the right-hand side here, we've got 50% swap. So when we come to actually buying or selling, we tend to sometimes DCA in and out of those trades. But altogether, with 12 trades, we've had these results here, 31%, 13%. So you can average these two to around about 20%, then 18%, 15%, 24, 21, 17, etc. So you can see that we've had incredible success in the private Bitcoin miners section. But through the comments, I know many people are interested in knowing exactly where we are with our portfolio in the private Bitcoin miner section. So for the benefit of those people who aren't aware, we started this portfolio here with around about $100,000 on the 6th of January in 2023. And that 100,000 went up to 434,989 at the end of 2023. So within 12 months, it went from 100,000 to 400,000. And we used this amount to start our ratio trading as well as a passive portfolio, just to give us a comparison of what the difference is going to be between a passive portfolio where you just pick a few Bitcoin miners and how that will compare with a trading portfolio where we do these ratio trades. And our passive portfolio, where we do absolutely nothing, we pick the Bitcoin miners at the beginning of 2024, as you can see here, with that same amount of money that we'd made at the end of 2023, 434,989, and this had now grown to 599,739. So this is 38% just from the beginning of this year. And our target for that portfolio is at $5 million. So we're hoping that we'll get a 10x from where we are today to the end of the bull market. And if you compare that passive portfolio with our trading portfolio where we do the ratio trades, as you've seen with the results, they've ended up giving us, instead of 599,000, we are 121,000 up with the ratio trades here to 720,000. So we're nearly at $750,000, having started off with $100,000. And that's a 66% increase since the beginning of 2024. So you can see that with the same starting point, the trading portfolio is doing far better than even the passive portfolio, which in itself is doing incredibly well, nearly $600,000. And we also have the same target here, which we set at the beginning. So if we do a 10x from here with the Bitcoin miners, which is incredibly plausible, then this would run to $7.2 million. And of course, there's no compulsion to do trading. Many of the members in the private section, I would say the majority, don't do the trading at all. Most of them are just following a passive portfolio, which has grown to 600,000. And we covered the Bitcoin miners with a video on Wednesday and Friday, as well as do the wider technical analysis with Bitcoin, etc. And really, with the Bitcoin miners, we've been on a journey from down here at the beginning of 2023. So far, this is where our journey has taken us. And we're just waiting for our journey anywhere around here, wherever it's going to be. It's looking increasingly likely that we're going to go towards the end of 2025. So from where we are to anywhere between to the end of 2025, that's where our journey will complete. And if you want to be part of that journey with us, either with ratio trades or with just a passive portfolio, or if you just want to use it as an educational thing with the Bitcoin miners, and extra bit of technical analysis with Bitcoin, etc. And if you want to join us in the private member section, all you have to do is click the join button here below any of my videos, or you can click this button here in the description box below all of my videos. And for the price of a coffee per week, you can join us at £12.99 per month. And as you've seen with the results we've got, it's a very small price to pay for an incredible opportunity between now and the end of the bull market. So all the information, all the updates, all the articles, all the charts are all on this tab here, the membership tab. And as you can see, we do a market update every single day of the week to go through the charts, the articles, any information on the Bitcoin miners, any ratio trades, everything is left on that tab there. So everything is in just one place. Okay, so we'll leave it there. I hope you found value in the video. And if you did, then please do remember to click the like button and to subscribe if you haven't already done so. If you've got any comments, leave them in the comment section. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.